Hey, rates dropped. Is it a good time to refinance? Maybe you need some cash. Maybe you want to get into a 15-year loan. Don't know if it makes sense for you? Let's talk about it. Welcome back. This is Jeremy with CU Mortgage Direct, where I take you from the closing table to your kitchen table. Today we're going to talk about refinancing. Does it make sense? So the rule of thumb is typically you want to refinance when it's 1% lower than your current interest rate. So the first thing you want to do is, if it makes sense, take your principal and interest of what you're paying right now on your current loan. And maybe you have 200 months left on your current loan. You take that payment times 200 months. Now, to compare it to the new interest rate, you want to put that new payment in that new interest rate and times it over, say, 360, which is 30 years, 240, or for 20 years, or 180 for 15 years, and see how much that will save you. Now, just because it's 1% and it sounds like a great deal, it may not make sense for you. A couple of things you have to ask yourself. Are you moving anytime soon? Are you moving within the next year or two? And the reason why I say that is because there are still closing costs when it comes to refinancing. And that is something to think about. It may not always make sense. Now, another great thing about refinancing, maybe you need a little cash for that home improvement. Maybe you want to buy a car or pay off some debt. Take a look at that too, because I can do a cash out refinance. Now, with conventional FHA, I can only lend up to 80% of the home's value. Now, with a VA, I can go up to 100% of the home's value. So depending on how much equity you have, maybe a cash out refinance is best for you. Now, maybe you have PMI on your loan. Maybe it's a great time to refinance, get that lower interest rate, and maybe your PMI will drop off because maybe you have 20% worth of equity. If you've been following my videos, we've talked about PMI and how it does you no good whatsoever, but it may be a good time to drop that PMI. Now, sometimes when I take a look at someone refinancing, I always want to run the numbers for, say, a 5-year loan, 10-year loan, 15, 20, or 30. You're going to get your biggest interest rate break when you, from a 30 down to a 15. So we can do the math to see, hey, what is the 15-year rate? Maybe your payment goes up $100. Well, you also paid off in 15 years. Here's the hard part when we go back to 30 years. Typically, you see a huge savings when we go back to a 30-year loan. It sounds fantastic, but also remember, you're going back to 30 years of where you started at. A lot of times what I tell people is, if you're making a huge savings and you don't want to go to a 15-year, maybe make the same payment you are right now and you'll pay it off a lot sooner. Lastly, something to think about. If you are refinancing, take a look at your loan estimate to see what the fees are. Shop it around. Also ask your lender, do you service your loan? So here at CU Mortgage Direct, we do service our own conventional loans, which basically means after your loan is done, we keep it. We do not sell it to a national company. That means you may be dealing with me over the next 15 to 30 years, which is maybe good or bad, depending on who you ask. When rates drop, you are going to get bombarded with all kinds of marketing material. Some of them are national lenders that you'll never meet face to face. Talk to a local lender. That way you can see them face to face. Maybe they service your loan. I would love to give a second opinion to see if you're getting a good deal. If you want to call me, text me, or email me, I really appreciate you for taking the time to talk to me today, and have a good rest of your day. Thank you so much for watching. If you're interested in learning more about the home buying process, check out all of these videos that I have out here.